Let's now move on to the theme address about Assocham Social Banking Excellence Awards. And to give away the theme address, I would like to invite on the dais Shri V. Vaidyanathan, Chairman, Capital First Limited, to please come forward. Let us welcome him as well.
Good evening, Mr. Jan’16, Mr. Dhoot, members on the dais. And I have chosen 3 subjects or 3 points to share with all of you as the theme address for the evening. Number one, when you step back and see what the banking system has done over the last maybe 100 years or so, and particularly over the last 50 years after nationalization, the total number of bank accounts open in the system during this period is about 650 million accounts. And the credit relationships of these is about 100 million accounts. Just park that number somewhere in your mind. When we look at the extent of social banking needs for the country, depending on the number of adult population, employed, self-employed in some form or the other, and by various estimates, the extent of need for financing is close to about 600 million relationships. Now, to expect a banking system with over 100,000 branches and over 125,000 ATMs, to expect to expand its reach from 100 million accounts to 600 million accounts in a near future to have is going to be a tall, tall order if done the conventional way. But parallelly, what is happening? Within the last 25 years, there is this housing finance company and the NBFC market that is evolving at the same time. And these two have put together close to about 40 million accounts and lent out a book of in excess of 10 lakh crores. In the last 10 years alone, the MFI market has put out close to 25 million accounts and with a loan book outstanding of 36,000 crores. So effectively, there is an ecosystem evolving around the banking system, which is not the banking system itself, but probably half a bank, that's significantly contributing, not in a marginal way, significantly contributing to the growth of number of credit accounts in the country. In a way, since the way it was discussed in the morning by the MD of SBBJ also, that the manpower of the banking system is probably already joining at a compensation of maybe 4 to 5 lakh rupees a year, because they're governed by the IBA pay scales or maybe pay scales of a bank independent of where the employee is joining, whether rural area or urban area, they're all getting the same pay. While an MFI operating in a rural market for the same work, for the same nature of work, same number of hours of work, is paying a salary of 1.2 lakhs a year versus a 5 lakhs paid by the banking system today, and a 3 lakh rupees being paid by an NBFC today. So naturally, there is the ecosystem which is closest to the ground, is most competitive, and therefore the existing banking system is finding it difficult to deal with this environment. And therefore, in a way, one way to address and deal this in a collaborative way is what's happening today. Because banks are effectively lending to NBFCs. NBFCs is also borrowing from the mutual funds and so on, or probably from multilateral institutions. They are in turn lending to the MFI, and the MFI in turn is going and reaching at the lowest cost to the end entrepreneur or the end. There is a need for this ecosystem to work together and support each other in really making social banking happen. The second point to understand is that many of these partners are not shadow banking partners, are not exactly shadow banking partners as we understand, because many of these partners, whether NBFCs or MFIs, have better capital adequacy norms as per the new regulations. The requirement for NPA requirement recognition is moving to equal to a bank at 90 DPD in 2 years' time. And so on. So basically, these are very much part of the ecosystem and can be supported as such, and which is what is currently happening. The second part that is to be specifically understood, that when we look at the banking system at large, close to about 70% of the banking system is lending to large corporates, which is what all banks have as wholesale lending, and only 30% is for the retail end consumer. So effectively, a good part of the credit has been lopsided and has gone away to the large corporate and is trickling down so-called to the end consumer, while it is time for all of us to actually give credit at the lowest end and create demand and trickle it upwards for the demand to get picked up by the large industries to start growing as well. The third thing that when we talk of social banking, it is nobody's case that's an easy job, but we all know it's a very important job. And one of the important segments, we usually talk of it as rural banking and agri-banking, but right under our nose, in urban areas, there is a huge underpenetration. At Capital First, for example, we started just 5 years ago. We got equity backing and we started this company. We already have lending to small entrepreneurs, 30,000, 50,000, 1 lakh rupees. We have 2 million customers, and we are lending close to 100,000 loans a month. So obviously the market is really very large. Basically the point is that the existing banking system with its hundreds of thousands of branches and maybe a million employees have really excellent grassroots relationship as they have evolved over the many, many years. If they latch on to the new technologies, the 236 million internet connections going to 500 million, if they latch onto the mobile connections, if they latch onto the 900 million mobile phones, if they latch onto the 70 million smartphones going to 400 million in the next 5 years, if they latch onto the new technology and they couple up the relationship, then they are really, really in a sweet spot. And if they don't latch on, then it could very well head the Air India way or the MTNL way, where in the due course of time it becomes irrelevant. So my sense, the kind of intensity with which this subject is being discussed, and the way this is being discussed over the last many days, including today, I do feel that the system is truly seized of it. This opportunity is truly big, is truly wanting to be seized by the system, and there is no doubt in my mind that the set of winners who are winning their awards today truly deserve to be complimented, because social banking is not an easy job to do. To lend somebody to seeds, to lend somebody subsidy, to say pesticides, to lend someone for education, to lend someone for, these are tough jobs to do. And therefore, this sort of ecosystem is to be truly appreciated. So with these words, that we believe that this is headed for a big, big growth in the days to come, and the 100 million credit accounts will grow to 600 million credit accounts in the years to come. I wish every one of the participants a very happy evening.